If you're just beginning the journey to dividend investing or have already started, you're in the right place because today we're going over 5 holdings that I think that everyone should have in their portfolio. I'm sure you're all well aware of the amazing effects of dividend growth investing, so we're not going to go over that during this video. But without further delay, let's take a look at the one, the only, the best monthly dividend paying stock, Realty Income.
Realty Income is a fantastic company to have in your portfolio, especially if you're new to dividend investing. They're well known for being the monthly dividend paying stock, and you can see for the last 652 consecutive months they have declared and paid their dividends. It's really cool to have a company pay you every single month just for owning the stock, and you can see right here Realty Income paid me $7 last month just for owning their company, and here in October I'm expected to make another $7.57. Realty Income pay monthly dividends, but they also have a very impressive dividend yield as well as an extensive dividend history. For example, their dividend yield is at 5.12%, and they've been paying dividends for 27 years and growing the dividend each and every year. And over the last 5 years, their dividend growth is sitting at 3.55% every single year. Over the last 365 days, Realty Income is up 22.06%, but over the last 5 years, they are down just about 20%, which is putting this on a pretty decent sale if you're looking to pick up this dividend payer. Now, if you're looking for some crazy dividend growth over the last 5 years, you're going to love this next stock pick. When most people think of Visa, they think of credit cards and debit cards, where Visa makes their money by taking between 3 and 4% of every transaction. But I think of the top tier dividend growth stock as it is. Over the last 365 days, it is up about 17%. And over the last 5 years, you'll see a staggering 58.12%. Now, to get into what all of you are looking for, the crazy dividend statistics. While the yield does only sit at 0.75%, the 5 year average growth is absolutely astounding. 14.65% on average over 5 years is absolutely incredible. And then when you look at the fact that they've been paying and increasing their dividend for the last 15 years, that just shows how incredible this is as a dividend growth stock. Visa can be a really hard company to compete with when it comes to dividend statistics, and the only thing that's going to come close is the third holding we're going to look at, and that is none other than Charles Schwab's SCHD. If you are at all familiar with dividend investing, you have without a doubt heard of the dividend equity from Charles Schwab, SCHD, so we're not going to take a ton of time to look at it, but it definitely should be something that you're holding in your portfolio. And if you're not familiar, they just did a 3-for-1 share split, so for every share that you owned, you now own 3. Now, after the share split, SCHD is currently trading at $28.54, and over the last 365 days, we've seen about a 22% price increase. And over the last 5 years, it sits at about 56%, which is pretty crazy considering it's paid over a 3% dividend the entire time. Now, looking at its dividend yield, it's sitting at 3.42%, but where I'm super excited with this is that they have an 11.3% average growth over the last 5 years. If you take a look at Charles Schwab's fact sheet regarding SCHD, you'll see that one of the biggest contributing factors to their overall success is this fourth point right here, and it's that they invest in stocks selected for fundamental strength relative to their peers based on their financial ratios. So basically, they're just picking the best of the best companies to be held within their ETF. Before we move on and look at that fourth company, go ahead and smash the subscribe button. It means a lot to me, and we'll be investing $3 for each new subscriber that we gain into this account right up here. So without further ado, let's go ahead and take a look at Altria Group. When most people think of Altria Group, their head goes straight to tobacco, but I like to think of them as a dividend giant as they have a really high dividend yield, which we'll look at in just a second. But if we look over here on their website, they did just release back here in August that they were having a quarterly dividend increase of 4.1%, bringing the dividend per share to $1.02 every single quarter. When I say they have a high dividend yield, I'm talking over 8%. They're sitting at 8.19%, which is pretty crazy, but they also do have some slight dividend growth of 4.05% over the last 5 years on average, and they do have a dividend growth streak of 15%. But with these large dividend payouts, it makes it really hard for the company to reinvest those dividends to continue to grow the company. And you can see right here, they're up 16% over the last 365 days, but over the last 5 years, you're only seeing about 12.5% in growth. Now, if you're looking to beef up your overall yield in your portfolio, Altria Group is a fantastic addition. As you can see, it makes up about 4.2% of my overall portfolio. The last dividend payment I received from Altria Group was $17.81, and that was for owning 0.46 shares, which was about $875 worth. For this last company, I swear they own everything under the sun, at least it feels that way, and you most likely have their products in your house or apartment right now, and that is none other than Procter & Gamble. Procter & Gamble owns some very common household names such as Pampers, Tide, Crest, Olay, Duracell, Dawn, and even Bounty. Procter & Gamble is currently trading at $171 and their market cap is over $400 billion. Over the last 365 days, they've had a return of just over 18%, and over the last 5 years, you'll see a pretty impressive 45.65%. But what I'm excited about is the dividend statistics. Dividend yield comes in at 2.35%, which makes their annual payout $4.03. Over the last 5 years, they have averaged about 6.03% in their dividend growth, and they have a dividend streak of 20 years, and they've increased their dividend all 20 years.
When it comes to dividend investing, being consistent is your best friend, so make sure that you're being consistent, reinvesting those dividends, and most importantly, smashing the subscribe button. Thanks, everybody.